Good morning, everybody, and this is your S&P 500 setups for today. So, as expected, we did get going. Didn't expect us to break through the structure of Friday, but we did. We'll get to that on the lower time frames. I think just highlight there is a very strong zone of resistance ahead of us, and that is between 50.57 and 50.45. So 50.50 is something that we do need to pay attention to. And bear in mind, last week we were there for quite some time before dropping to the downside. So rather big tail here, and I think if you look at it on the daily, you can see a fairly big rejection bar. This is almost a range bar. Oscillators grouped to the downside on the daily and crossed over, which is good. But I would, from the daily perspective, we're going to need a little bit more confirmation before assuming that this is a change. So let's just drop down through the time frames, see if there's anything different that we spot. We do need to just put that tail in because you can see that's where we're finding support at the moment. That's at 50.10, and that goes as low as 5,000. So for me at the moment, and we were going parabolic, and we have now broken above the swing high, well, not the, but a swing high of last week. And let's just put it in. It's just going to simplify life for us. You can see there's the swing high there. So we need to find support above there, and then I would argue that that would turn into a double bottom. However, this gap to the downside here is still open. There's a massive gap here. So this could be a flag. Now, political noise is dying down, but you do have the FANG stocks, so Google, Facebook, etc. Results coming out this week. So that could turn things on the head, or it could give it the juice that it looks like it's looking for a move to the upside. Now, there's no real, nothing really of interest on the oscillators at the moment. This big up, big down, big up, big down is still a bit of a worry to me. It's not structured, and you can see we've, as I pointed out yesterday, we do have this series of higher lows, and we've now got a higher high as we break through this high at 50.21 from Friday. So I'd like to see us find support there. That's still my ideal setup. However, we're just going to add another bit of structure in here. We have formed another little zone here, and prices here at 50.10, and it's 5,002. So 5,000 has broken. We've broken to the upside. We haven't tested it. So that is the one that I'd be paying attention to. So when you look at this, and today's earnings, there's not much in the line of earnings today, but this was a fairly solid, strong move up through all the moving averages and then back. Oscillators all over the place. No real structure here. We have gaps all over the place. We have a gap right here at 49.95. We have another little one. Where would this one be? At the close at 49.82. And then we have this daily gap still open. So 50-50. There is merit for another move to the downside, and you're going to see that on the higher time frames. So do something like that. Now I'm making the chart really busy, but if I just drop down 3 hour, you should see it. So strong move down, bear flag forming for another leg down. So that is something which is still in the back of my mind, and you do have a strong area of resistance at 50-50, which we've almost tagged. I would expect a second move, and I say almost tagged. If you just line it up to the 3 hours, it has tagged it, but that's at 50.39. So cautious, caution, cautious, caution. I'm not entirely convinced we have a move to the downside, and I'm also not entirely convinced that we have something brewing for the upside. So way to play this charts will work, is going to be as follows. Wait for the market open, and I'd wait for the US open. I wouldn't worry about pre-market, because you see all this pre-market was going nowhere until the US market went going, and almost got to the first fractal above the or did it? I think it did get there. Let's put a level in. So often what happens when you get a gap, there's always an ambush at the first fractal level that's just above the gap, and that's it there. And you can see, well, it didn't quite get there, but it did attempt. So that's where it was aiming for, and then got going. So I think for me, wait for the market to open. Pay attention to right where we are now at 5,000. What you may find is getting above 50.21 and then aiming for, firstly it'll be 50.39 or 50.40, and then all the way up to 50.57. There is a lot of potential resistance in this zone, so whatever base is built, that's where you're going to take profit. And I'd feel a lot more comfortable if we can just build a base above 50.21, which is Friday's high. That would be ideal, but I also want to see the oscillators grouping like they are here. So yeah, so for me this is still a tough call. I don't think you want to just jump in for the sake of jumping in. If you look at the hourly oscillators, nothing really indicating anything for you, but we do have what could be solid structure here forming. So it's 50.10, 5,000. So if it does defend, that's not a bad option. Quite risky, 470 point stop loss, because your stop loss is going to have to be below the swing low of yesterday, which means that this move was 660 pips. Fairly strong move that. Anyway, that's kind of my cautious outlook, I would say. We do have a crossover brewing on the hour. There's a lot of structure here. The structure further down, I don't think we're going to get to this 49.72 unless something happens on the results, which is completely unexpected. I think we're probably going to be trying to build a base here for this thing to turn around. But there's still some work to be done before we can say that we are on our way. And I think 50.50 is probably going to be your final line in the sand. So yeah, pay attention to what's happening at these levels. If you do get your pin bars, inside bars, engulfing bars at either 5,000, 5,010 or at 5,021, definitely an opportunity. Your first target is going to be 50.39, and then your second target will be a little bit higher than that, will be 50.58. But I think if you can get above 50.40 and come back and build a base here, that should be the final straw. I think that would you'd probably see us get up, pull back, and then that's going to form a big inverse head and shoulders. Anyway, I'm not looking for shorts, definitely looking for longs, but I want to see the structure off one of these levels I've given you. If you start dropping below 5,000, then I will just wait and see what's going to transpire lower down. But yeah, this double bottom, which is here, is still a very viable option, provided we can get support on 50.21, and that's going to take you, look at that, lines perfectly up with a fairly decent level at 51.13. So that's kind of my view, but then this little wedge it's forming is what's just putting a bit of doubt in my mind. But obviously the wedge would only come into play once we drop below the swing low of Friday. No, sorry, the swing low of yesterday. Okay, anyway, that's my view for today. Just be cautious. If you're unsure of something, keep those position sizes small, and a little bit of a wide stop loss, not too close of a stop loss, because it could just still turn into a bigger range if it really wanted to. I hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.